Assalamualaikum and
Hi everyone!
I'm Adlina.
I'm Karen.
I'm Deno.
And I'm Elisha.
Welcome back to our channel. In today's video, we will be talking about Islamic finance versus conventional banking.
And we will be covering 5 main objectives, starting with the introduction of Islamic finance, followed by real-life banking example and how banks present both systems to the customers.
Then we discuss factors influencing customer choices, impacts on both systems and our recommendations.
Oh, and don't forget to click subscribe, like, and share button. Let's get started!
Finance is one of the most important pillars of modern economics. Around the world, two major systems of finances are widely practiced: conventional financing and Islamic financing. Conventional banking operates based on interest, where banks earn profit by charging interest on loan and paying interest on deposits. This system is widely used globally and focuses on financial efficiency and profitability. In contrast, Islamic banking follows the principle of Sharia or Islamic law. It prohibits the charging or receiving the interest known as riba. Instead, Islamic banks generous profit sharing, asset-backed financing, and risk-sharing arrangement. Although both banking systems provide similar financial services, they differ in their methods and generating profits in managing financial transactions. Banking operates on interest-based model. The bank lends money to the customers and earns profit through interest known as riba in Islamic terms. Depositors also receive interest of their saving. The bank focuses on profit maximization and shareholder returns. Risk in the conventional banking is largely transferred to the borrower. Whether the borrower succeeds or fails, the bank continues to earn interest. Conventional banks are neutral. They do not restrict financing based on religious or moral guidelines, which means they may have defined industries such as alcohol, gambling, or tobacco. In contrast, Islamic banking is guided by Sharia principle, and the most fundamental concept is the prohibition of interest or riba. Instead of charging interest, Islamic bank use contract based on the profit and loss sharing, such as mudarabah, where profit are shared between the bank and the entrepreneur, and musyarakah, a joint venture partnership. And Islamic bank avoid financing activities considered haram, such as alcohol, gambling, or pork-related business.
Now, let's take a look at our role-play video of real-life example for both banking systems.
Counter to number 1078.
Assalamualaikum Puan. We would like to ask about home financing at RHB Bank. We would like to buy a house.
Waalaikumsalam. Yes, sure. So at RHB Bank, we offer two main options, which is conventional home loans and also Islamic home financing. So what is the difference between them? They seem the same to us. As you can see here, the difference is in the concept. For a conventional home loan, it is based on interest or profit rate charged as interest. The bank gives you a loan and you repay it with interest over an agreed period.
So basically, we borrow money and pay extra because of interest.
Yes, that's correct. So on the other hand, Islamic home financing does not involve interest. It follows Sharia principles such as murabaha or buy vitamin ajil, which are based on trade or asset transaction.
So the bank doesn't directly lend money into Islamic financing?
Exactly. In Islamic financing, the bank first purchases the property and then sell it to the customer at a price that includes the bank's profit.
So the monthly payment is based on fixed selling price and not interest?
Yes, the payment is usually fixed and more stable compared to fluctuating interest rates.
Oh, so that means customers can choose whichever option suits them, right?
Correct. As you can see here, at RHB Bank, we provide both options so customer can choose either a conventional system or a Sharia compliant one.
Oh, that's clear now. Thank you. It will be easier for us to decide.
You're welcome. Feel free to visit us again.
Moreover, based on the research published in Science Direct 2023, conventional banking provides several important benefits to the economy. First, it's catalyzing economic growth by collecting deposits from individuals and businesses. Conventional banks accumulate large pool of capital. These funds are then channeled into loans and investment that support economic activities. This financing helps to support large-scale infrastructure projects such as roads, buildings, as well as public utilities. It also enables corporate expansions, allowing businesses to grow and entrepreneurship by providing a startup, as well as business loans. Secondly, innovation in digital banking. Traditional banks actively integrate digital innovations such as mobile banking. This technology improves the efficiency of banking service and reduces the need for physical branch visits. Mobile banking allows customers to perform transactions such as transfer, bill payment, and account checks anytime and anywhere. Overall, this innovation modernizes how consumers access credit, manage transactions, and monitor their finances. Next, according to IMS Education 2024, Islamic banking offers several advantages, such as prohibition of interest or riba. Islamic banking forbids the charging and paying of interest riba, which is deemed exploitative. Instead of interest-based lending, Islamic bank use profit and loss sharing principle and asset-backed transactions. For example, in Islamic home financing, the bank and client jointly purchase the property. The client then gradually buys the bank shares over time through agreed payments. This system promotes fairness and transparency as returns are linked to real economic activity rather than fixed interest charges. Other than that, Islamic finance strengthens financial stability. In Islamic finance, investments are approached more cautiously and must comply with Sharia principle. The decision-making process involves thorough evaluation to ensure ethical and asset-backed investments. Companies or industries that are considered overly risk or non-compliant are excluded from the investment portfolios. As a result, Islamic banking helps promote a more stable and risk-conscious financial system. On the other hand, conventional banking also has several negative impacts. This system can create an imbalance where large corporations generate high profit while paying relatively low fixed interest rates on loans. Meanwhile, middle and lower income savers receive very small returns on their deposits. This can widen the gap between the rich and the poor as wealth tends to concentrate among those with existing capital. To address this issue, financial regulations can be strengthened to ensure fair lending practices. In addition, ethical banking practices such as ESG, environmental, social, and governance, and CSR, corporate social responsibility, should be promoted to encourage banks to focus not only on profit but also social welfare. Another issue is that conventional banking can transfer most financial risk to borrowers, especially during financial crises like job loss or economic downturns. Strict requirements may also limit access for low-income groups, leading to financial exclusion. To improve this, banks should strengthen credit risk management and expand financial inclusion policies so that more vulnerable groups can access the banking system. Islamic banking also has some challenges. First, its complexity in operation. Due to strict Sharia compliance, Islamic banking procedures are often more complex compared to conventional banking. This can make product structuring and transactions more time-consuming and difficult to manage. To address this, the Islamic banks can apply Sharia-compliant risk management tools such as takaful-based protection, profit-sharing contracts like musyarakah, cost-plus financing like murabaha, and buy vitamin ajil, a deferred payment financing method based on installment to reduce uncertainty. Another issue is the lack of unified global standard in Islamic finance. This can lead to difference in interpretation, where a product may consider Sharia compliant in one country but not in other. To improve this, global Sharia standards should be strengthened through cooperation with organizations like Accounting and Auditing Organization for Islamic Financial Institution and Islamic Financial Services Board. Better regulatory harmonization between countries can also help create more consistent Islamic banking practices worldwide.
Today, I will explain the main factors influencing the conventional banking system. There are three main factors under conventional banking system. First, interest rate. Interest rates are determined by the central bank and play an important role in influencing borrowing, saving, and investment activities. So, when interest rates change, the cost of loans and the returns on savings also change. The second factor is profit maximization. Conventional banks aim to maximize profit through interest-based lending, investment, and financial services. So this profit motive is a key driver of their operation. And the last factor is credit risk. So, before approving a loan, banks evaluate a customer's ability to repay. Borrowers with a higher risk may face higher interest rates or stricter lending conditions. So, in a conclusion, the conventional banking system is mainly influenced by interest rates, profit maximization, and credit risk. Next, I will explain the main factors influencing under the Islamic banking system. The first factor is Sharia compliance. Islamic banking must follow Islamic principle and avoid prohibited elements such as riba or interest, as well as excessive uncertainty and gambling. And the second factor is risk sharing. So, unlike conventional banking, Islamic banking encourages the sharing of profits and losses between the bank and the customer. So, this promotes fairness and shared responsibility. And the last factor is asset-based financing. All financial transactions must be linked to real asset or real economic activities. This ensures that financing is based on tangible value and not on speculation. So, in a conclusion, the Islamic banking system is mainly influenced by Sharia compliance, risk sharing, and asset-based financing.
Now, I will start explain recommendation to improve for conventional banking. The first recommendation is to strengthen cybersecurity and data protection. As banking services become more digital, cyber threats such as phishing, hacking, and online fraud are increasing. RHB Bank should continue investing in advanced security technologies such as multi-factor authentication, biometric verification, and AI-powered fraud detection system. This measure will help protect customer information, reduce fraud risk, and increase customer trust in the bank digital service. The second recommendation is to enhance digital banking service. Customers today expect fast and convenient banking experience. RHB Bank can improve its mobile banking application by offering faster transaction, easy navigation, instant account opening, and online loan application. The bank can also use AI chatbots to provide 24-hour customer support. This will improve customer satisfaction and attract more digitally savvy customers. The third recommendation is to strengthen customer rewards program. RHB Bank can introduce more attractive cashback offers, loyalty points, shopping discounts, and exclusive rewards for long-term customers. Personalized rewards based on customer spending habits can also encourage customers to use RHB Bank's banking products more frequently and strengthen customer loyalty. Now, let's move on to RHB Bank Islamic Banking. The first recommendation is to expand Sharia compliant digital banking service. RHB Bank Islamic should offer more online service such as digital financing application, Islamic investment platform, and digital wealth management tools. This will make Islamic banking more convenient and accessible, especially for younger customers who prefer online banking. The second recommendation is to develop more innovative Islamic financial products. RHB Bank Islamic can introduce flexible financing solutions for young professional SMEs and first-time homebuyers. The bank can also expand Sharia-compliant investment products and sustainable financing options that meet the changing needs of customers while remaining compliant with Islamic principles. The final recommendation is to increase public awareness of Islamic banking products. Many people still have limited knowledge about Islamic banking concept and products. RHB Bank Islamic can organize seminars, webinars, and educational campaigns to explain the benefit and principle of Islamic banking. This will help attract more customers and increase confidence in Islamic financial services.
In conclusion, RHB Conventional Bank and RHB Islamic Bank are important components of Malaysia's dual banking system. Although both institutions provide similar financial services, they differ in their underlying principle and operational methods. RHB Conventional Bank operates based on an interest-based system, while RHB Islamic Bank follows Sharia and emphasizes ethical and asset-backed transactions. These differences allow customers to choose banking products that best suit their financial objectives and personal value.